Coming up on Market to Market, ethanol pushes back against market headwinds. Demand for a Southwest specialty crop is heating up. Those stories and market analysis with John Roach next.
Is really quite unusual.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, February 1 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Delaney Howell is away this week. The effect of the partial government shutdown on the economy has been mixed. Federal reports on a hiatus for a month came back this week to fill the data gap. Adding to an 8-year run, 304,000 jobs were created in January as more people decided to look for work. The unemployment rate rose to 4%, but the trend may depend on the final shakeout from the partial government shutdown. The economy continues to hit Fed benchmarks, but the committee opted to leave interest rates alone in light of current global economic conditions. Midwinter blues reached a low point as a polar vortex grabbed a hold of the nation's midsection and refused to let go. Temperatures of -20 were common in the upper Midwest. Blowing snow created whiteouts and 8 lives were lost due to the harsh conditions. Wind chills reached 50 degrees below zero. Temperatures are predicted to swing and feel nearly 100 degrees warmer in a matter of days. And in those warm conditions and the risk of rain will create a threat of flooding. The shutdown may have ended in time for federal approval of year-round E15. Iowa is the nation's leader in ethanol production and provided the backdrop for an industry snapshot. 2018 provided challenges for renewable fuels. Many industry advocates believe it stemmed from then EPA Administrator Scott Pruitt on a number of fronts.
It was the uncertainty, the constant work, the level of work, the frustrations, the fact that, even though we won every battle we knew about, we didn't know about the small refinery exemptions until after they were done, so we couldn't fight it, and they ripped the heart out of a program I'd spent 10 years, along with all the people in this room, building and defending, and it was very, very frustrating at that point in time.
The small refinery exemptions, or SREs, were on the minds of many speakers at the 2019 Iowa Renewable Fuel Summit held in suburban Des Moines, including the Hawkeye State governor, who told the assembled crowd she's been in constant contact with the Trump administration on this very issue.
When I talked to Acting Administrator Wheeler, and they are working towards this, I said the criteria for exemptions, they have to be reasonable, they have to be transparent, and any exemptions must be reallocated to the remaining obligated parties.
We've all referred to those small refinery exemptions being handed out like Halloween candy, and I think what we'll see moving forward, I don't think there'll be any less applications for those. I'm hopeful that there'll be a little more scrutiny put to the appropriateness of those before those are actually granted.
What happened in 2018 will have some carryover into this year in many forms and write new history for the industry.
We're going to have several court cases on the old small refinery exemptions come due, which will impact hundreds of millions of gallons for better or worse. We're going to have a reset rule. We could have an E15 year-round rule. We could open up trade to China, or maybe we won't. I mean, all of these things are on the plate for 2019. So, it could turn out to be a great year where we're popping champagne corks at the end of the year, or we could be in the dumps.
Resolving the trade war with China was also a big discussion point this week, as negotiations are vital to many aspects of agriculture in 2019.
Well, I can tell you from an Iowa corn perspective, We can't wait. We have to get this done. It's important to my growers. It's important to the state, as Eric said, as an agriculture state. There's no waiting. I mean, our farmers need it.
I would not be surprised if we can put this trade war to bed this year. You could see 300 million plus gallons going to China in 19, and 1 billion gallons is not beyond the realm of possibility in 2020, which is when their mandate kicks in full force all over China.
Industry leaders also cited President Trump's commitment to E15 as a big deal for rural America, but now the final language needs federal approval.
It was a good win, but if we can't implement it, it doesn't happen. So I will also.
The Super Bowl for many is mostly about commercials, camaraderie, and maybe even just a little football. But let's face it, food is the real star of the weekend. Each spread is different, but all will likely contain something with a little pepper-induced heat. Chili peppers compete on the same field as award-winning wine, with soil and weather conditions influencing taste. But the battle for branding is only part of the marketing mix for the nation's growers. Josh Bittner has more in our cover story.
In the land of enchantment, New Mexico's signature farm commodity casts a spell on the taste buds, sparking a fiery debate.
So the big question, red or green?
Green.
Red.
Chili peppers, green or red, have enriched the southwestern palate for longer than apple pie has been American.
We let it tumble in there and the skin just comes right off.
Green chilies make everything better.
Oh yeah, we eat them on everything.
Every year, tourists flock to the small town of Hatch, New Mexico, the self-proclaimed green chili capital of the world, to celebrate and devour a fresh harvest.
I just love this place. I'll probably be back next year to buy more chili so I can have it all year long.
More lucrative green, New Mexico chilies turn red the longer they stay on the vine, offering a different taste profile and dried powder. The crop is entwined with local identity. Hanging ristras are symbols of health and good luck. And New Mexico has enjoyed good fortune as the national leader in chili pepper production, though fault lines may be appearing.
If you look at the production in the United States in 2016, California accounted for about 2/3 of that production, and New Mexico accounted for slightly under 1/3.
Dr. Jay Lillywhite is an agricultural economist with New Mexico State University, where hybrid research done over a century ago gave birth to today's robust strains. And on campus in Las Cruces, the Chili Pepper Institute continues to educate and promote an industry he claims is worth over $400 million annually. Lillywhite adds that although New Mexican chili production has dropped from 35,000 acres in the early 1990s down to around 8,000 today, the state's processing infrastructure still beats out domestic competition. But pressure from other states and Mexico have some digging deeper as a buffer against disruption.
There's only so much chili that can be grown in the Hatch region, or only so much chili that can be grown in New Mexico. And as that demand continues to increase, if you can actually build a marketing campaign around that, there will obviously be premiums.
Hatch Valley growers have adopted a distinct branding strategy to distinguish their product from a host of others. Adjacent to the Rio Grande, the region has long been hailed for its unique blend of favorable soil and climate conditions.
The Hatch Valley here in southern New Mexico has become synonymous with high-quality green chili.
Grower Preston Mitchell says his yields average 20 to 30 tons per acre, with prices ranging from $500 to over $600 per ton for green varieties.
You can hear that nice crisp pop as it pops open. Tear that pod open and you'll see just a thin little yellow strip running up that vein, and that's the capsaicin in the pod that you taste as heat.
Labor costs can bite into profits because harvest is done by hand. Mitchell says finding workers is a challenge in itself. Mechanization, long rumored, remains elusive. And drought, all too abundant.
95% of the water that fills up Elephant Butte comes from snowpack runoff. And we just haven't had it since 2003 on a regular basis. We may have one good year, maybe two, and then nothing.
Elephant Butte Irrigation District covers over 90,000 acres of irrigable land in southern New Mexico. Manager Gary Esslinger says low levels in reservoirs on the Rio Grande north of Hatch forced ratepayer allotments down from an average 3 acre-feet to just 10 inches in 2018. But a complicated set of decades-old agreements also legally require the utility to satisfy surface water deliveries downstream first to Texas and Mexico.
Certainly we have to abide by the law and yet try our best to supply the water that's necessary to these farms. It's a constant battle, and the litigation is always flowing here. It never stops.
EBID has been at the center of legal wrangling between the federal government, Colorado, New Mexico, and Texas for over a decade in regards to water rights under the Rio Grande Compact Agreement. The case is expected to go before the U.S. Supreme Court next year. And it's a gamble for New Mexico, says Esslinger, adding that new stakeholders, ushered in by recent population booms, are unfamiliar and unwilling to compromise with water laws drawn up over 80 years ago.
It's the public at large that really doesn't understand the complexity of how we have to operate down here. It's real easy for me to explain to a farmer what's going on because of the drought, because most of these farmers have been here 3 and 4 generations, some of them even 5.
My great-great-grandfather is actually credited with being the first chili farmer in the Hatch Valley. His name was Giuseppe Franzoy, and he was an immigrant from Austria.
Preston Mitchell's operation pumped a majority of groundwater to irrigate crops during the past season. But over time, only salty, brackish water is left in uncharged aquifers, making an infusion of fresh Rio Grande River water essential.
The drought is a major concern to growers in this area.
Mitchell has had to grow his business to remain profitable. Expanding acres, processing, and roasting chilies have all become a part of the mix. As word spreads and orders for Hatch Valley green chilies come in from across the globe, Mitchell reiterates regional branding is a vital ingredient for future growth.
Hatch chili is sought for by buyers at grocery stores such that they will not take chili from elsewhere. So it kind of allows us to have this little niche within the overall green chili market and continue to farm and continue to be able to farm profitably.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
South American harvest conditions were overshadowed by news of progress on Chinese trade negotiations. For the week, March wheat gained 4 cents and the nearby corn contract lost 2 cents. The commodity market chewed on southern hemisphere weather conditions and an unofficial breakthrough in trade talks with China that was short on details. Both failed to push the market higher as the March soybean contract fell 8 cents. March meal dropped $2.10 per ton. March cotton dipped 49 cents per hundredweight. Over in the dairy parlor, March Class 3 milk futures gained a dime. The livestock sector headed lower. April cattle cut 57 cents. March feeders retreated $1.10, and the April lean hog contract shed $2. In the currency markets, the U.S. dollar index dropped 15 ticks. March crude oil jumped higher by $1.59 per barrel. COMEX gold added $18.90 per ounce, and the Goldman Sachs commodity index increased 4 points to finish us at 413.25. Joining us now to offer insight on these and other trends is one of our regular market analysts, John Roach. John, welcome back.
Thanks, Paul. Nice to be here.
I thought at this time yesterday we were only going to be talking about one thing and one thing only, and that was an announcement made in the Oval Office. We'll get to that in a moment with China. Let's start with wheat, though. I guess that's what we call a tease, right? We'll leave it that way. We also talked about weather this week. Wheat. What's going on there? Because the rally was 4 cents, but I take it this winter didn't really kill the wheat?
Not to anyone, no one's really trading that. What really happened in the wheat market was a break from the highs that we had a couple weeks ago, and that break bottomed, and we ran right down into export buying. Russia is virtually out of exportable supplies, and we're suddenly the store left in town, and so our offers are competitive now, and we're getting some of the business. And that brought the wheat market back up and closed nicely today.
So is there, I think the Russia story's been out here for a couple of weeks. Is there any further story fundamentally that will change things that way, or are we in a technical pattern here for a little while?
Well, it's an important time for wheat producers. I mean, we're going to bring wheat out of dormancy. So the weather conditions as we move forward here through the month of February are always important. We frequently will make a high in the wheat market during this time of the year. So we're kind of expecting that. We're expecting this rally to carry further and looking for opportunities to get some sales made here over this next month.
So the next month, time to pull a trigger on some sales.
That's what we're looking for, yes.
Okay. All right, let's get to corn. To use the weather analogy, it looked like the corn bulls maybe ran out to the outside without a shirt on. They kind of just stopped. There's a Twitter question that we got from LJ in southeast Minnesota, similar to the point here, John, as we were talking. He goes, I'm hoping that this past month is not the yearly high for December 19 corn. Is there much room for a rally to 430 and above, or should I continue to be let down?
First of all, this is the wrong month. This is the wrong time of year, really, for corn to make a high trade. Typically, this time of year, you have farmers that are trying to get bills paid. They're figuring out what they need to move out of the bins, and they're active. And so the corn market tends to be sluggish. We tend not to get to the kind of prices we like to sell new crop on until that March-April period. And so we're just being very cautious, careful, and reluctant to sell, optimistic that we'll have some better prices on corn. The fundamentals on corn are actually tightening compared to where they were a year ago. Our export shipments are the best they've been in 10 years. Ethanol's down just a little bit, but we're still looking at better numbers as we move through this season rather than poor numbers. Our supplies are actually tightening. And so we need to adjust markets for that. We also need to adjust for the acreage. Currently, a lot of farmers are talking about just maintaining their rotation pattern. The market is going to encourage farmers to plant more corn and fewer beans, so that we need to distort the relationship from where it is, or need to move it on new crop corn and beans. We need to cheapen beans relative to corn, or have corn come up relative to beans.
So there's plenty of questions that we'll get to in Market Plus that are similar to that. They're wondering if some of this soybean news that's possibly coming from China is going to mess up that rotation that you're talking about. What do you think, besides a major price uptick or major news from China, is going to dramatically change the acreage projections that are being made for corn?
I don't think we're going to drastically change but we need to move them some. So when people have acres that they need to make decisions on, that the decisions come up in favor of corn. That's the kind of adjustment. That's not necessarily dramatic, right, but it's incremental.
But that's where we saw the direction was kind of headed that way anyway here over the last month, right? Isn't that what we were hearing without a government report to lean on? Was, yeah, we're planting more corn. We're going to plant more corn.
Well, that's the talk maybe in some areas, but the traders don't believe that. Most people believe that farmers are not going to plant enough corn, and so the corn market still has a little bit of a job to do relative to beans, the price relationship.
All right, am I selling anything right now, either near term or?
We were big sellers of soybeans this week. We think that the soybean market has a problem with carryover and fundamental surplus, although the Chinese news moved that needle today. Take 5 million tons of increased exports and 5 million tons reduced carryover, but you change the size of that carryover bar that we look at on our chart, but you don't change it enough. We're still dealing with one of the largest carryovers in history, and we need more business, and if we can get that business, then we can talk better about the soybeans. But until we do, we have to be willing to sell these rallies, not only on the old crop, but also some of the new crop.
China bought 32 metric tons in 2017, dramatically lower last year. If this 19 starts and continues to what we've seen here in the last 24 hours, is there optimism that we're going to split the difference between 17 and 18, or where do you think our sales are going to be to China?
It's all a political decision. And the interesting thing about this, and also sort of depressing, is that the outlook in the future on our soybean sales hinges upon their willingness to not steal U.S. trade secrets and so forth. I mean, that's really where the argument is, to get China to follow all of the world laws and to reduce some of those things that they've been accused of.
Did you expect a little more bounce in markets this morning on overnights after the news yesterday that came out of the White House?
Actually, not really. We've been in a sell signal on soybeans for 4 days. We thought that this was a great opportunity to add to those sales, and so no, we didn't expect a big runaway. We think a lot of farmers have a lot of beans that they need to sell, and so what we've seen is every time the market runs up into this price area, farmers are happy to sell some beans, and we get pushed back down.
I think you referred it in your newsletter a couple times this week. There's going to be a lot of beans celebrating their first birthday in a bin. You think that's going to continue?
I think, yes, absolutely. Somebody's going to have to carry beans into the new crop. And so nobody really wants to do that. If we talk to them today, they say, no, I don't want to do that. But what the market's going to do is it's going to make that your best choice. If you don't pick a price and get your beans marketed, your best choice eventually will be, I'll carry them on into the new year.
Okay, so how much longer do you think a sell signal is going to last?
I think we may, well, actually it closed today. We lost it. We lost it on the close today.
Okay. All right, I have to get it real quick in here. I know they told me no on cotton, but I want to get it in anyway. John, this week, cotton has been one of those things where it's been stuck in a range. Is it tied to some of this bean discussion, or is it on its own island right now?
No, I think it's in the same situation. We're dealing with political situations having the biggest impact right now on agriculture prices.
All right, livestocks now in cattle. We had a good run up here, and again, same metaphor, the cold just really snapped this back. New contract highs, but then all of a sudden we fell back from that. What's going on?
Well, we had a rally up into some very good prices and very good profit levels, and we issued a sell signal on cattle, and I'm presuming a lot of people around did the same thing. And so the market had a big reversal day, which left an ugly picture on the chart, and we'll probably have some more pressure from it. But we're not negative on cattle longer term. We think this cattle market can still move better into the late spring, but right at the moment we've run about as far as we can. The dressed beef came under pressure, and so the market is stalled out here for a moment, and it may take a little bit of time to get through. We don't know for sure how much weight we've lost in cattle and how much we've backlogged, and so our slaughter numbers out forward are a little bit uncertain at the moment, and so we think we kind of shake that out. We think the market will come on higher.
Is that mostly tied to weather?
It's had kind of numbers. We've had a rising cattle market and strong demand really for several months here.
Okay. Did I miss my chance to make a sale?
If you did by 1 day.
Okay.
And so usually that's not a bad deal. If the market rallies back up, sell into it.
The feeder market, we talk about this cold. It is hard. The thing is, the cold didn't get to some of the major cattle regions of this country. Most of the upper Midwest, that's not the big numbers. Is that what's playing in this market that dropped here at week's end?
Well, the feeder cattle market was stronger in the primary feeding areas. And we're seeing, when we look at what percentage of profitability are we looking at right now? On heavier weight feeders, you're at the 94th percentile of how much profit you've ever had to buy the feeders and sell the fats and buy the corn. And so the feed ratio, or the cattle crush, they call it sometimes, you're in actually as close to being as profitable as we normally are.
When you say profit in feeders, all I can think of is Walt Hackney saying, how much damn profit do you want to make, right? Something like that. Let's get into hogs. This is still something, again, back to China. We didn't hear much news about the fever this week. Is African swine fever done?
No, but it has slowed down. And the attitude is that maybe they've seen the worst, and hopefully so. We all got dressed up for a party. The hog market was going to, when I was on in the late fall of the year, was, we're really setting ourselves up for good export demand. we haven't seen any of it yet. So the Chinese swine fever problem has not brought itself to our shores as demand for pork, and everybody anticipated it would. Meanwhile, our slaughter numbers are running bigger than what the Hog and Pigs report indicated they should. So we've got bigger numbers out there than were anticipated into a weaker demand kind of market. And so we're just stumbling over ourselves here until we can get these supplies cleaned up.
Well, and we're also, I mean, do you run in a little conspiracy that maybe we're not getting the most accurate news out of China? Maybe they're fudging of either how good or how bad it is, and that's influencing us? Are you a conspiracy theorist, John?
I'm not so much a conspiracy theorist, but I don't believe them. I mean, we just have to be careful. Their reporting and so forth is different from ours, and it may be politically tinged, we don't know. And we've seen their numbers make big changes, and so their reliability is a little bit uncertain. But what we do know is they have not come to our marketplace and been buying our pork, and we really anticipated that that would happen.
All right, John, a little tease here. We have a gift for you that we're going to give you in Market Plus, so stay tuned for that. For now, John Roach, thank you very much. That wraps up the broadcast portion of the television program we call Market to Market, but we will keep this conversation going in Market Plus, present John Roach a gift, and we'll answer more of your questions. You can find it on our website at markettomarket.org. And you know what? Find us on Facebook. Search IPTV Market and get behind-the-scenes information and other stories of interest. Give us a like today. Join us again next week when we'll look at the East Coast industry working to rake up new markets in the Midwest. So until then, thanks for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.